Alright, cool. So I'm gonna go over this trade that I've taken on Euro USD. Managed to catch these Euro USD longs towards these highs, and then I could have actually had a runner towards the daily fair value gap, but um, previous week high and on the daily, these triple equal highs was my draw on liquidity anyway, so it was good enough for me to hold. But yeah, we'll quickly go over this trade, right? So starting off on the daily time frame, on the daily on DXY, I was saying that I wanted to see price to come into this daily fair value gap, right? This one here. And currently at the time, we were rejecting the previous week's high, right? We have this large imbalance. At the time, we had this large imbalance, and we had the previous day's high, and we swept it, and we're massively overextended on the daily, right? 1, 2, 3, 4 expansion candles, and we're inside of a bearish key level inside of the premium, right? So my bias was to anticipate price to at least take out the Friday low into the daily fair value gap and a small volume imbalance before seeing a continuation higher. And if we got a closure below this daily fair value gap, then we could look for continuation lower into these lows. So that was my game plan, right? So the short-term drawn liquidity was this daily fair value gap, right? For me at the time, right? And the framework that I was using to go short on DXY or long on Euro is the fact that we've swept the previous day high, and we was closing inside of the range, right? And rejecting this bearish key level. So this was my short-term drawn liquidity at the minimum, and we'll try to stick to Euro as well, right? I don't want to make this trade breakdown confusing, but yeah, I'm basically just going over the trades that I took inside of this range at the time as well, with the same logic. So same thing here, we set the previous day low, and we were starting to displace higher. We had this untapped daily fair value gap, so I wanted to see price come into it before selling off. So that gave the framework to look for some counter trend longs towards this, right? Because we've taken out the external, being these lows. We've tapped this daily imbalance. We're overextended, right? So if price has this large bearish dealing range, and then we take liquidity, and then we start to displace higher, right? We take out the liquidity resting below the previous day low into bearish key levels, and then we're also massively overextended, right, on the daily. Imagine this on like a 1 to 4 hour chart, and then this is the daily fair value gap. Then we can anticipate price to give some sort of retracement into this daily fair value gap, right? And this should give some sort of framework on the 1 to 4 hour time frame to look for those counter trend longs, right? So yeah, it will do something like this, and then if we're bearish from this daily fair value gap, then you might see like a sell off here. But yeah, you can get an entry here and TB here or some shit like that, and if it offers a good enough risk to reward ratio, then you can take it, right? In this scenario, it did actually offer a good enough risk to reward ratio. But also another thing to mention is that when I'm trading against the daily order flow, right? So for example, daily order flow is bearish, right? Massive sell off, and I'm just looking for a retracement play from the external back into the daily internal, being the daily fair value gap. Essentially taking a counter trend play, I need a few things to align. One is I need to wait for some sort of confirmation. I need to wait for 2 confirmations on the hourly time frame, right? Not one. So for example, in the market maker buy model, right? You'd have the reversal here, so you'll get your breaker formation, breaker, order block, fair value gap, whatever, market structure break. But because the order flow is so bearish that this can also be a stop run, either price will do something like this, or price will do something like this, right? Sweep these highs and then continue lower. So inside of a bearish trend in order flow, you don't want to confuse your market structure breaks for stop runs to continue the bearish order flow lower. So because the trend right now, as you can see, very bearish, right? We're just continuously selling off on the hourly time frame. You don't want to get caught out by price, running this high, for example, and then selling off, and then you think, okay, that's a breaking structure, we're gonna go higher. So yeah, that was the framework. Right, we have this daily fair value gap, untapped daily fair value gap, so we swept the previous day low and rejected, and we've also had two confirmations on the hourly time frame. We didn't reject these highs, we pushed above it and formed an imbalance, right? And we formed this 4-hour order block. So this is the bullish key levels that you want to see price use to continue higher, right? So these are the bullish key levels that you want to see price to continue higher from, and then all you look for is some sort of rejection from these bullish key levels that have formed on a 1 to 4 hour time frame. So we have this low that's engineered, we sweep this low into this hourly fair value gap and 4-hour order block, and then we push higher, and then we formed this new order block. So that was the confirmation for me to go long, right? So I took this, I actually longed the hourly fair value gap instead, right? And then we felt to push higher, right? We came up, swept this high, and then we came back, retraced it into the fair value gap, and then we saw a bit of a push higher, and then we couldn't see a continuation, right? I remember on this day, Euro GBP was the stronger pair, right? We saw Euro GBP was bearish, right? We were seeing the sell-off on this day. And we saw pound given the strong haven't been a stronger pair on this day, right? So 3 a.m 4 a.m we this fair value gap, right, didn't even get tapped on pound, but euro tapped this imbalance and then gave the push higher. Pound was so strong that I didn't even tap the imbalance and just kept ripping higher throughout the day, right? You can see how bullish euro was, and then you can see how bullish pound was, and pound tapped the daily fair value gap, euro didn't, right? So at this point I manually was managing the trade, and then once I saw price start to drop lower on the lower time frame, I closed my trade at break even here, right? And then we swept this low and then pushed higher and then sold off again. So at this point I clocked that, okay, we're kind of in a range and profile right now, right? So we didn't get the push up from this order block into the daily fair value gap because of the strength, but then at the same time DXY also hasn't tapped into this daily fair value gap yet. Right? On Monday we almost tapped it, and then Tuesday pushed up higher and left the flat open and took out the range highs again, which was the indication to me that, okay, I'm not going to be bullish here until we see price take out these lows, because I can see now we have 3 stacked up daily lows together, which is trend line lows on the lower time frames, right? We had this low, and then this was the daily fair value gap. So we have all of these trend line lows, and we've taken out the range highs here. So you don't want to look for longs here, especially because we also rejected the range highs, right? You see price wicked above and it's starting to reject the range highs, right? So you don't want to look for longs inside here with equal lows here. You only want to look for you want to either look for shorts towards these lows, or you want to wait for price to run these lows and then look for longs here. So again, the same framework, we took out the range lows again, right, which was this low being the previous day low, and at this point I was pretty much just looking for similar confirmations, right? Some sort of displacement on the hourly time frame to signify that, okay, we might actually come for these highs. And then we had this low, we ran the lows again, and then we started to see price start to push up here, right? Consolidated, we have this hourly imbalance as the high time frame key level, right? and then all I want to see is a confirmation from this imbalance that we're going to go higher, right? Because then that suggests that price is in bullish order flow. Sweep, displacement, key level, sweep into that key level, and then displacement higher, new bullish PD arrays forming. It shows that price is respecting the bullish PD arrays that are formed, creating new bullish PD arrays, and then disrespecting bearish PD arrays at the same time. There's not really any bearish PD arrays here. But yeah, this is still just at this point in time, price is clearly respecting bullish order flow anyway, because we are sweeping liquidity into bullish key levels and displacing higher. So once we rejected this is also a 4-hour key level, right? So we had this 4-hour fair value gap. We had all of these lows that you want to see price to sweep before going higher, right? So and we're expecting price to come and take out these equal highs into this daily fair value gap. So we have the bias being these highs as our drawn liquidity, right? We have the liquidity stacked up here. We've had a sweep of the range lows, and we have the range highs, which is low resistance liquidity being untapped. We have the bullish key levels, which we want to see price to reject off of, and that's our narrative to anticipate price should continue should use these key levels to go higher, right? All we need to do is wait for some sort of rejection from the 4-hour key level, and then all you do is just wait for that inside of a session, which is what we did, right? We had this massive push down, which was due to news, and then we reversed that whole move, which is showing to me that this is manipulation. And then if you use the context of where the time of day that you anticipate the low of the day to form, we formed this low at 3 a.m. right? 3 a.m. is a crucial time of the day that you can expect the low to form on a classic buy day. So on a classic buy day, manipulation will usually form at 3 a.m., which is the London session, right? So that's a time-based low instead of a key level, in line with a higher time frame narrative and our bias. So yeah, at this point we formed this new bullish order block after rejecting these key levels. So I took this long here, right? And then my invalidation was below this 15-minute BPR, because if price disrespects these two fair value gaps, right, this bearish one which got inverted and this new bullish one that forms, then the trade is invalidated, right? Because these key levels is what's holding price to continue higher. So it looks good, right? Initially longed here, and then at the new this new 4-hour open, right? This 4-hour candle close, very nice. Large wick rejecting this 4-hour fair value gap, strong closure. So I was anticipating this 4-hour candle to be expansion higher, right? See, I was longed here. It looks great, right? From this first hourly candle, we had this nice push up higher, and then we just started to see a bit of a drop. So I was thinking, okay, we might chill inside the imbalance a bit long, might consolidate before pushing higher, but then got stopped out straight away. Yeah, got stopped out on this trade straight away. But again, the bias is not invalidated, right? Even though we came back lower, this could just be either the bias is fully invalidated or is just a mistiming in price. And unfortunately, this was a bunch of Iran news which came and stopped me outright. But price went for the range lows again. And then at this point, I realized, okay, I might want to, chill outright, because we might just range for a while before we see that push up higher into these highs. But the bias for me is still to either look for longs into these highs or to look for shorts above these highs back to the lows. So as long as that narrative as long as that bias is still there and there is a clear narrative that we can use to align to get involved in that move, then I'll still be looking for the same plays, right? It's not like, okay, I've taken a stop loss, cool, now I'm gonna go short. Here now there's just no framework to look for longs, but then At the same time, there's no framework to also look for shorts here. We're just in a range, and you don't want to look for shorts inside of the mid-range, right? You always want to look for inside of a range, either longs from the range lows, because then you want to target the range lows to the range highs, because that's where the sell stops are resting, right? Or you want to look for shorts from the range highs back to the range lows, and especially if the range lows aligns with a bullish key level, or the range highs aligns with a bearish key level. And in this case we had both, right? The range lows here aligns with this bullish order block and this bullish fair value gap here, right? Same thing on DXY. DXY had the same thing, this fair value gap here, and you can see we rejected the range highs multiple times. Look how many daily candles were rejecting the daily highs, the range highs here, right? Until we eventually got this sell-off. We didn't close above the range highs one time. So looking for longs on DXY when we rejecting the highs multiple times is just low probability. You want to wait for price to at least take out the range lows into the key level before looking for longs. Same thing with Euro, multiple equal highs. You only want to look for shorts once we take out the equal highs before going short. You don't want to short inside of the range, because then that's just how you get chopped up and cooked. So yeah, took a loss on this, which was fine because this is a high probability setup, right? After I've just explained why the setup was a good setup, right? Even this one, right? Double confirmation, previous day low sweep into a bullish key level, overextend and higher time frame order flow, daily fair value gaps untapped. So we have a clear bias and narrative to anticipate price to go from this fair value gap on the 1 hour into the daily bearish fair value gap. Same thing here, right? We have the clear, we have all the liquidity sweeps, multiple sweeps, displacement, 4 hour and hourly key level, time of the day as well. We formed a London low of the day manipulation inside the 4 hour key level, and we have multiple equal highs. We have the daily fair value gap, daily high, and then all of these stacked up highs. These are low resistant trendline highs. So eventually we can anticipate price to go for these highs. It's just if we're able to get a setup that allows us to take this with a safe stop loss, a safe invalidation, and a favorable risk to reward to get in line with that expansionary move. And we didn't get that. We didn't get that here because I got stopped out, and I didn't get that here because we got break even. But the highs are still intact, meaning the bias is still valid for me, right? So yeah. And then at this point, I closed the charts after I got stopped out here because I'm anticipating we're just going to keep consolidating. And I was kind of just waiting for price to take out these highs instead of getting cooked in this range, looking for longs. But then heading into next week, right? That was the previous week. Absolutely shit price action here, right? But then on the next week, right, what happened was Monday, and this is where you can use weekly profiling to anticipate where the high of the week should form, and then where price is likely going to draw to from the weekly candle expansion. Currently inside this range, right? Equal lows are intact. Monday, even though it did tap this daily fair value gap, EU hasn't tapped the daily fair value gap. Not only that, it's left perfect equal highs on Wednesday, right? So we have Monday, Tuesday being a range in profile, right? Consolidation, equal highs here as well on Wednesday. So Wednesday was also range. And then heading into Thursday, we had this massive manipulation down, right? We didn't take out the range lows, but if you look at DXY took out the range highs here, right? There's also a previous week high. This is a area and price that we anticipate reversals from previous week highs, previous week lows with context behind it. We have a range, a previous week high, which is engineered liquidity inside of a weekly key level, right? This weekly key level, this weekly fair value gap, we haven't which we haven't disrespected yet. Same with on the daily, this daily fair value gap. And then so DXY took out our range highs, and then we got this V-shaped reversal, right? So again, same thing here, where we have this hourly imbalance as the key level. Same thing here, we have this hourly imbalance, and we have this inversion fair value gap as the key level to look for shorts. You can, if you want to take a low risk sell, you can short this here with your validation here, right? Because you have the weekly profile in line, right? To anticipate this could actually be a high of the week. Thursday, Monday, Tuesday, Wednesday consolidation, Thursday being the manipulation, and then the remainder of Thursday and Friday to be expansion, right? But I didn't feel personally comfortable taking that because again, it's against the daily order flow, and price has just been in a massive range this whole time. So price could also confidence high one more time or keep ranging. So I didn't want to. I wanted to look for that second confirmation, like I did here, for example, or here, for example, where you swept this high into the hourly fair value gap, formed this order block, and then that should have sent price lower. I wanted to look for the same thing here, right? So we got the exact same confirmation. We have this high, we swept the high, and then we displaced lower and we formed this propulsion block, right? So that's the confirmation for me to go short on DXY and long on Euro. So, and then at the same time as well, we also had this massive SMT. DXY took out the range high, Euro fell to take out the range low, and this is probably baiting people to go short, right? Because they're seeing, oh, okay, we're tracing back to the premium, and we have equal lows. So price is gonna likely sell off from these levels to the equal lows. But again, we have equal highs, we have SMT at the lows. We formed the hourly bullish key level, so that's already the bias. It's already to look for longs into these equal highs, and we already have the narrative because we have the SMT, which is essentially the same as price running this low. It's like if the drawn liquidity is hit, you're not gonna look for continuation shorts, right? It's the same thing here when you have an SMT. SMTs usually occur at levels where you anticipate a reversal, so that was even more of a confluence for me to look for longs here. So yeah, I just need the confirmation that price is bullish, right? And this hourly BPR is not bait for me to long it, and then price goes for the lows again and then stops me out. So yeah, same thing here. We had this low, we swept the low into the fair value gap, and then we pushed higher, closed above this down close candle and forming a propulsion block. So I longed here with my validation at the New York close, anticipating that we have this London, there's not even a London low of the day, but this low is going to hold as the low of the day, and we're going to see a New York continuation from here, right? So I took that, and then immediately saw expansion, which was a great sign. Pretty much no drawdown on the trade. Came back into this hourly imbalance, pushed up higher again, and then we left equal highs. And at this point, I was even more confident that price is going to come and sweep these highs, right? Because firstly, if you look at the daily candle closure, very bullish daily candle closure, right? SMT at these lows, swept all these daily lows, and then closed above and formed this daily order block. So the next day is likely to gonna be a continuation, right? If price retraces back into the previous day's range, it's likely gonna be a classic buy day profile, and you can even pyramid or scale in another position and look for those longs into those equal highs and this daily fair value gap. So yeah, for me, I closed out on my funded literally top ticked here at the top, and then on the challenge accounts I was still holding with no partials taken, right? SMT. So I didn't because we had literally triple equal highs now, and the daily imbalance still untapped. Same with DXY. We had these equal lows here, and we had a 4-hour fair value gap, which I wanted to see price use as the key level to go lower from the next day into the daily imbalance. And we had the daily candle closure, very bearish one, right? So the previous day high, massive daily expansion, lower, large displacement. I wanted to see price to give a open high low close daily profile and take out all of the take out these lows into the imbalance finally, right? So if say you miss this move, right, the next day if it gives a retracement, you can get in on the next day's power free daily open low high close to get involved, right? So what do you want to see on the next day to get involved in that? So You want to see some sort of power, free, AMD, whatever, accumulation, manipulation, distribution. What do you have here? We have an accumulation, and below the accumulation we have a 4-hour key level being this imbalance, and then you also have this imbalance, and also you have this breaker block, right? You know, we have this high, low, and then we break, close above these down close candles, and these up close candles and these down close candles form an order block, and this would be your breaker. And then you also have these fair value gaps. So we have bullish key levels on euro. We have the bearish key level being this bearish fair value gap on DXY. So all you want to see is a run of the range highs on DXY or run of the range lows on euro into the key level inside of a session, and then anticipate that would be the low of the day to hold. So same here, we have this hourly fair value gap. We swept this low, and we also swept the Asia lows in London session, right? So the range, this low here, right, and this low, we swept these lows, and this low is also the 4-hour fair value gap, right? So 4-hour fair value gap on euro, we tap it and sweep the Asia lows as well, so stop running to a key level, and then we start to push higher, right? On the hourly time frame, there's nothing really too clear, because if you want to take a trade on an hourly time frame, you have to wait for a closure above here, which is going to be pretty much you missed the whole move at that point. So at this point, you can also use the 15-minute time frame as your intraday time frame here, right? What would be your confirmation to go long on euro? It would be a closure above these down close candles. This would be your bullish order block, and then if you want, you can count this as a bullish breaker as well, right? High, low, and then break structure. So if you want, you can take an entry here with invalidation here, and then your take profit would be here, right? Or you could hold for this high, which would be the daily fair value gap. But because I was already positioned from down here, I didn't want to take this entry, and I'd rather just hold my position from here, right? But yeah, this would have been perfectly valid. If you also wanted to take a soup entry, you could have taken this with your invalidation here. But then if you look at the risk to rewards, you have to hold for all the way for this high for it to be a decent RR, right? But those are two valid options, right? Especially when you're anticipating the next day to be a classic buy day. You just wait for that power free to happen inside of the session, right? So yeah, beautiful here. Stop run on the hourly time frame into 4-hour fair value gap, London low of the day profile, and then we had this New York continuation, and then straight into the highs. So yeah, beautiful price action here. Weekly profile as well. Monday, Tuesday, Wednesday accumulation, Thursday being the manipulation, and then we have the distribution phase, and Friday being the continuation, classic buy day. So yeah, beautiful setup on euro. But yeah, again, the price action on euro again has been very hard this year, right? Because look at this range here and here and here. It's very hard to get these type of setups. You know, they form once every few weeks. So but yeah, I managed to catch this week, and I managed to catch the shorts from here, from the middle of May. So yeah, I'm very happy with the performance that I've had this month, right? I think I'm up around 3 or 4R this month. So yeah, especially in these type of trading conditions where I know people are probably blowing their accounts in this type of range, or even, you know, flipping biases. And yeah, this is the type of conditions, like this is easy to trade, right? You just short. But then in these type of conditions is where people blow their accounts. This is probably the type of conditions prop firms love for traders, because this is where the statistic really shows, where, you know, the 99% of traders fail, or I think it was the 98% of traders don't see a payout. So yeah, these are the type of conditions where if you know how to trade these conditions, then you can trade it. But if you don't, then you're better off just sitting out and waiting for price to, you know, start trending again, tapping the daily fair value gap and then looking for your continuation shorts in line with the daily order flow. So that's just a quick market breakdown on essentially the last 2 weeks of price action, right? The trades that I've been able to take, the trades that were valid to take, and any other trades in this range, in my opinion, for my style of trading, they weren't valid. So yeah, we'll just end it off here.